All right, we can get started now. So I'm not sure how formal this is going to be. I'm sort of going to give well, first I'll give an introduction. I'm Barry, obviously. I am CT personality. I don't know what you call it. I have been studying the chicken bonds mechanism flywheel for, I'd say, a large portion of my life. I spent a good deal working on the fair price bounty, which with shout out to 0xD24. We worked on that for a while, and ultimately we came short. Like we gave up in the end, but we worked extensively going over the mechanisms, and I really have you guys can at the end. I'll go through like how the mechanism works, like a basic overall deep dive, and then I can start taking questions from if anyone has any questions. We can go from there. So yeah, if Token Race, you want to introduce yourself?
Yeah, sure. So yeah, to accompany Barry today, and thanks for organizing the space and inviting me. So I'm Token Bryce from Liquity's team. Yeah, I guess just for quick background on myself is actually a bit similar to you, Barry. So I've been doing DeFi and researching stuff for like 4 years, pretty much since it started. I have a blog and live shows on Twitch, and this was a bit of my first activity in DeFi, trying to analyze interesting models, the like of Curve or Liquity, even before I started working there. And yeah, I got involved with a few projects along the way. And starting last April, I joined Liquity team, so slightly ahead of the Chicken Bonds, and yeah, with the vision of kind of being the lead, the face of the Chicken Bonds. I know it might be a bit extensive, but essentially, yeah, helping to make sure Chicken Bonds are implemented all across DeFi where they are relevant, and that Defiance and the yield enjoyers are in the known about the mechanism, essentially. So thanks for the invite, Barry. Looking forward to the chat.
Yeah, for sure. It's gonna be great. All right, so I guess I'll start off. I guess I can start off going over. I'm sure everyone here has like a basic understanding of how Liquity, the protocol itself, works. So I guess should we start off with a quick general overview?
Yeah, I think it would be worth it. Maybe even if it's just 2 minutes. I can do it if you want.
Yeah.
Okay.
Go for it. Go for it.
All right. So the product we're going to be discussing today are chicken bonds. We're going to be touching the topic and explaining what they are in just a minute. But one key thing to understand about chicken bonds is currently they are built on top of Liquity stablecoin LUSD, and they harness a mechanism of the Liquity protocol. And so this is why we want to give you some pointers on Liquity. It's not a free share. It's really just so that you can have the full context to understand. So what is there to know about Liquity if you're finding out about this protocol? Quite a few things, but let's keep it short. I guess the main selling point is that to this day, and the protocol released about 17 months ago, it's still the only unstoppable lending service there is ever on a blockchain, if we're honest, not just on Ethereum. So it's literally the most resilient lending service you can use, which also makes LUSD the most resilient stablecoin the Ethereum blockchain has ever seen. So those are not small feats. Of course, they come with significant design challenges. One of which is that the demand for LUSD right now is very high, and the appetite for leverage, so for borrowing dollar from Ether, this is how you create LUSD, is, as you might have suspected it, pretty low, because the ETH price depreciated quite a lot and markets are bearish, so people are not full-on risk-taking leverage, essentially. And so this creates a situation where you have a bit of a price premium on LUSD. So over the last few months, essentially LUSD has been trading at about $102 to $103 to other stablecoins. So it means a 2 to 3% premium. So yeah, this is what the chicken bonds are trying to address. And just to conclude on Liquity, there is another fascinating mechanism that was introduced by the Liquity protocol, and it's called the stability pool. And there are a lot of interesting things about this design, but essentially what stability pool achieve is a full democratization of the liquidation profits. So the way it works is that on Liquity, there is this pool where user can stake their LUSD and they earn LQTY token. That's a stability pool. But then this pool serves as a liquidity backstop for liquidations. So when there is a trove to liquidate, the liquidators is actually just triggering the liquidation, but it uses funds that are already there ready to liquidate someone. So it enables the liquidation to be much more fast and reactive. And so this also enables Liquidity to be more permissive in terms of how much you can borrow. And last thing I promise, so the interesting thing about this stability pool is, as I was saying, it enables anyone to partake in liquidations. So
yeah,
so essentially it means you can deposit LUSD here, and it kind of acts as a buying option on ETH essentially, because most of the time nothing will happen. You will just be farming LQTY tokens. But then if ETH price depreciate enough so that liquidations are triggered, well, your funds would be used for liquidations. And then, of course, it all depends on what happened after that on the ETH price to determine whether you're in profit or not. But you see the mechanism in how it gives anyone access to those liquidation profits passively. So if it was a bit long, Barry, yeah, I'll pass it to you from now.
Yeah, no, it's great. I just want to add something there. The reason why LUSD is trading at a premium, not only is there not so much appetite for leverage, which would be like an indirect arb because you can mint at $1 and you can swap back to another stable and wait for LUSD price to come back to peg. But the reason why is because Ether has come down a lot, so people have had to swap through, like if they levered up, because obviously LUSD is like is the most capital efficient stablecoin on Ethereum at least, and so people utilize it to lever up on use the LUSD to buy other assets in the market. But like when the price of Ether is tanking, they have to swap back to LUSD in order to repay their trove, their debt and their trove. So obviously the price goes up when there's this buy pressure, and then the curve pool gets imbalanced, and then there's this price premium. Yeah. So I guess we can jump right into the mechanism. So we all have know what a bond is, and basically what it's doing is you are bonding your LUSD stablecoin. In return, once the bonding period is finished, as you're earning over a cap, you're accruing BLUSD, which not to be confused with bonded LUSD. BLUSD is boosted LUSD. So you're earning a boosted yield when you hold this BLUSD, which you get and you accrue as your chicken bond is accruing value over, like when it's in the pending pool. So when you're in the pending pool, this is it's the first pool you're in. The pending pool is when you're accruing BLUSD according to the cap, which does change relative to market conditions. But what's notable is that you earn more in the beginning. It's like a concave curve. So you accrue a lot more in the beginning, and then like obviously the rate of return slows down in terms of how much BLUSD you earn over the cap. And then once you get to the cap, that's your cap. But here's the thing. This BLUSD, once you chicken in, so chicken in is fancy for saying you have your bond and you want to chicken in and earn yield. You want to earn your BLUSD. So the BLUSD, you will, whatever, according to the cap of whatever your bond is at the moment that you chicken in, you can, so the percentage of your bond that's been matured, you could call it, will go to you in the permanent pool, in the reserve pool, reserve bucket, and the rest will go to the permanent bucket. This permanent bucket will be protocol and liquidity, but we'll get to in a second. It serves a special use case. So the idea is, so how is this BLUSD? How is this boosted? How is this yield boosted?
Wait a minute, Barry, if I may. You've introduced like 15 notions, and I realize that for someone that is discovering chicken bonds, it might be a bit dense. So just to really take a step back, because I've been presenting chicken bonds a lot, and I kind of know the questions people have in head. So the first thing I kind of want to put as context is, for the bonding, we kind of all know what bonding is, but what we know of bonding is usually something like Olympus-style bonding. This bonding you have in the chicken bonds is completely different. And the way we present it is we call it a no maturity principal protected bonding. And so if we kind of cut everything and tackle it one by one, no maturity meaning that there is no maturity date on your bond. There is a period after which it will make sense for you to rebond, but essentially you can keep a bond forever and it will accrue BLUSD forever. The only thing is, past the first month, it will accrue BLUSD very slowly. But it gives you choice in when you want to claim the bond. The other thing, the principal protection, so meaning that if you interact with the chicken bonds, your principal, the amount you invest in, is protected, not the yield. And how is this achieved? Well, this is chicken out, I think Barry touched. So
no, I didn't say it.
Oh, okay. So I'm going to add it, and then we can go back to it, I guess. So when you create a bond, you obtain an egg visually. You have your bond, you deposited some LUSD into the protocol, and starting from here, you have two mutually excluding options. So it can be either one or the other. As soon as you take in one option, you no longer have an egg, and you cannot take the other option anymore. And so your two options are pretty straightforward. So you bonded LUSD to accumulate BLUSD. Therefore, your two options are, at any point in time, you can claim the BLUSD you have accumulated, but as we were saying, it will make sense to claim them roughly after a month because of the accrual cap. And then the other option you have is also, at any point in time, you can decide to go back home with your assets like nothing happened. That's chickening out. You literally recover your full amount that you invested, and you even get a scared chicken NFT on top of it to remember your deeds.
Yeah, I'm sorry about that. If I went to
no worries. I can feel the passion when you're talking, man. It's really nice.
Yeah. So I guess now, so you understand that there is two different options you get. You can obviously chicken out and walk away with your principal, whatever you bonded in first, whatever LUSD you bonded in the first place. But obviously, when you're in the pending pool, like that LUSD that's sitting in the pending pool, waiting to, when you're accruing this BLUSD, this balance of BLUSD according to the cap. So that is put to work essentially. That is in the stability pool, and that's earning yield. But it's not earning yield for the people in the pending bucket. It's earning yield for the people who already chickened in and are in the reserve bucket. So when you chicken into the system, according to the cap, you will earn whatever amount according to the cap, whatever amount you have, like whatever amount, however long it accrued, you will earn that balance of BLUSD, and whatever else will go into the in the pending bucket, in the permanent bucket, as protocol and liquidity.
Yeah, so I guess to just explicit that step, let's take it from the other angle of, you've put LUSD in the system, let's follow them as you go through your life cycle of interaction with the system, essentially. So Barry mentioned those buckets. Those are like internal accounting tools. There are three of them: pending, permanent, and reserve. So what happens when you bond LUSD, you're essentially depositing into the pending bucket. The pending bucket has one job: produce yield. It does so harnessing a source free of impermanent loss. And it has another requirement, which is you can chicken out. at any time. So it means the pending bucket must be able to restore to any depositor its full LUSD amount at any time, which is why when you create a bond, what happens is essentially 100% of the LUSD you deposited are put into the pending bucket and they go make some yield. And so this enables, of course, that if you chicken out, well, they get pulled out of the farm and they get returned to you. And so you recover your full amount. So that's the chicken out being ensured thanks to the pending bucket. Now, you wait a few weeks, let's say a month, your bond mature, and you're happy with the BUSD amount you have accumulated, you are chickening in. So what happened at this stage is that the LUSD you had in the system that were in pending are going to shift and be split between permanent bucket and reserve bucket. So reserve is pretty straightforward. It's what backs BLUSD. So it means that in the reserve, you have at least as many LUSD as the BLUSD supply. But you actually have more because the whole yield of the system is redirected to the reserve. And so this is what explains. Also, you might have seen that BLUSD floor price, we'll touch on the price a bit later on, but you might have seen that BLUSD floor price is like 102 almost already. Why is that? Simply because I don't have the exact figure in head, but say you have a supply of BLUSD of 2 million, and you actually have in the reserve 2,050,000 LUSD, for instance. And so if you do the math, you find the premium. So that's a reserve, accruing the yield of all the system and backing BLUSD. And finally, the last component is the permanent bucket. The permanent bucket is here to fulfill two functions. The first one is to supply liquidity to Curve eventually. And the second one is to guarantee to the user of the system that there will be a yield amplification even if no one ever, never bond after them. So you can picture it as the permanent bucket is essentially, it's a bit of a schematic way to present it, but the anti-Ponzi device of the system. Because, it means that, because from what I've said, you understand that essentially if there's no new entrant, you'll still be making an amplified yield. Why? Because of this resource in the permanent bucket. So those are for the buckets. Sorry if I'm a bit too step-by-step, Barry, but I just want to make sure we're not losing anyone.
I ramble too much. Yeah, for sure. I ramble too much. So like I go too quickly sometimes. So what's important to mention is you have now the reserve bucket. So once you've already chickened in, and when you chicken in, your funds obviously go to the reserve bucket, and you're earning this BLUSD. You're earning this. You have LUSD in the reserve bucket that's boosted. So it's earning the yield from whatever is in the pending, whatever is pending in the pending bucket, whatever LUSD is in the pending bucket, that is in the stability pool. That yield is going to the BLUSD holders, and whatever this is the cool part, as Token Brush mentioned, you have the permanent bucket, which whatever it's in, we'll talk about the shifting later. But it could either be in the curve, the LUSD3 curve LP, or it could be in the stability pool, whatever is more economical. So that yield, whatever yield that the permanent bucket earns, goes to it accrues sort of like, so BLUSD has a floor price, and that floor price is depending on how much yield is being. So let's say that there's 5 million BLUSD or 5 million LUSD in the reserve, and then in the total overall system, you have like 20 million in the reserve, and 20 million in the pending, and like 500K, or let's say a million in the permanent. So the yield of the 20 million in the pending, the 1 million in the reserve, in the permanent, which is permanent and can never. That's what Token Brush was mentioning on the anti-Ponzi always yield amplification. All that yield, including the base yield of whatever LUSD is in the reserve, that is the yield amplification. So you take and then that BLUSD has a floor price, and what all the yield earned goes to the improving obviously like the price of BLUSD goes up relative to how much yield is earned and the supply that's of BLUSD. And the reason why the BLUSD token price is now almost $1 is because all this yield that's been in the pending and permanent, which because of this market price, which we'll get into later, but you have this yield because of this discrepancy between the amount in the reserve and the amounts in the pending and the permanent. So you have all this yield coming at a smaller amount of supply in the reserve. So that's why this yield is going up quickly. You could say like.
So it's actually really interesting because if you understood the chicken out mechanism, then you understood that as long as you are considering that the contracts of chicken bonds and the protocol use you're comfortable with the risk you're taking here, then you understand that the best strategy, without even thinking about it, was to essentially max bond on the first day, whatever you could. And the funny part is very few people did that, and especially DeFi OGs, because they were scared. But the funny part, again, is that those who did that, they essentially started accruing BLUSD as early as they could. And because most of the users came in the last 10 days, so they're still pending right now, it means that they're going to get a lot of amplification from those users. So essentially, because the system is a bit early and all the yields are redirected to the reserve, but right now, in terms of, you have essentially 27 million LUSD in chicken bonds, about 23 million in pending, about 2.5 in reserve, and about 500K in permanent. And so that means that all that yield goes to reserve. So essentially, the yield of 27 million LUSD goes to 2.42 million BLUSD holders.
Yep.
And so that's a really cool part. That's what we mean by yield amplification, currently at 10.68 times. So what this number means is that for one BLUSD, you are earning the yield of 10.68 LUSD.
Yep. And this yield amplification, as he said, will obviously go down as more, because there's it's so concentrated in the pending right now. But when these people either chicken in or chicken out, so like obviously this amplification will go down when people have more, when there's more tokens in the reserve relative to the entire system. And so it's important to mention. So when you chicken out, that your principal is protected, which means the only thing you lost is the time. So the time that you were in the pending pool, the pending bucket, you were accruing yield for the reserve. So the only thing you lost is the amount of yield that you would have earned if you were just simply in the stability pool yourself. But other than that, it's completely like you get your principal back. You have anything before we go into the market price? Is there anything else you think we should mention?
Yeah, I guess we should definitely discuss the prices to help people navigate. We also haven't talked about the LP for BLUSD, which is exactly. Of course going to be a topic. Kind of just listing ideas, and then you tell me where we go, okay? We could deep dive too on the yield source. So we told people that, those LUSD are farming stability pool, but we haven't really explained how it works exactly, the auto compounding aspect of BLUSD and so on.
Yeah.
And okay. So let's do that. You want to attack on it?
Sure. So when you're in the stability pool, as Token Bryce mentioned earlier, you're essentially the backstop of the entire system, and whatever liquidations happen, so if the collateral ratio is 110%. So if the collateral ratio goes below that, you can be liquidated. And what that means is your LUSD that's in the stability pool is used, and it pays off. And the ETH collateral goes into the stability pool of the liquidated trove when it goes below 110 collateral ratio. And in return, like, you pay off the debt, and like they absorb. So you're having net profit of at least like up to 10%, usually like about 10%. And like you could use this to collect ETH at a discount, basically. So what's important here? Yeah, is there anything?
Well, I just wanted to add a little detail here. So what happens when the stability pool liquidates is it liquidates at a 10% premium against ETH. Yeah, the current ETH price at time of liquidation. But I guess what Barry means is, of course, you don't know the future. You don't know what's going to happen. So you might be liquidating at a 10% discount now. But if ETH keeps on dumping, it all depends. But still,
exactly.
it's a very attractive option because most likely you're buying a dip because there are liquidations, and you're buying that dip with 10% discount on top of it being a massive dip, So that's could be an interesting one.
If you remember back in, I think it was June, July, you had like for maybe 1 or 2 days, like the stability, someone massive got liquidated. And like the yield in whoever absorbed that got like 750%.
Yeah, I remember. So what happened is a $60 million trove, 60 million LUSD of debt got liquidated. And so that was a very happy day for Stability Pool depositors. And very funny because among which was Olympus, the protocol, which was taking LUSD, and they bought a ton of ETH, about 70K ETH, I think, during that liquidation. But yeah, really funny that you touch about that, because just to connect back to the chicken bond, remember the yield amplification we mentioned before? Essentially that 1 BLUSD currently gives you the yield of 10 LUSD. Well, it works with liquidations too. So if tomorrow there is a massive dump and there are liquidations, you're going to be taking 10x liquidation gains as BLUSD holders. It could be a very interesting scenario, but it's also unlikely. I don't know the price, I don't know what's going to happen. But still, really interesting characteristic, I think, of BLUSD.
Yeah, I think I saw. I was like keeping an eye on the liquidation monitor. It was people are really risk off, to be honest, in the Liquity system. Like there's a massive liquidation, maybe at like $700 ETH. So like there's not going to be that. Like that won't happen like anytime soon. Hopefully, we'll see. But back on topic. So the LQTY token and like this liquidity mining is the yield source. Without like if there were no liquidations, like the yield source is the LQTY emissions. That's like the base stability pool yield, and that is all being accrued to. That's what you're earning. When you're a BLUSD, except when you have BLUSD, you go through B protocol, which is like working with LUSD with Liquity to they have their own product to do the same thing, but they're going to be taking that LQTY, the LQTY earn, and they're going to be selling it for LUSD. So the LUSD, so you're only earning LUSD when you're going through the chicken bond system.
Yeah. So if you want to know the full... Oh, sorry.
No.
Go ahead. Oh, just a funny, I don't know, but interesting trivia here. So initially, B protocol started as an external solution, the BIMM, that was built on top of Stability Pool. And the goal was to sell the ETH obtained through liquidations back to LUSD.
LUSD, right.
So essentially having an LUSD position and maintain LUSD exposure 100%, 99% of the time, because you cannot liquidate ETH instantly. But yeah, so that was the main thing initially. And what's being used for chicken bonds is exactly that, except there's been a custom development made on top of it, which also compounds the LQTY back into LUSD.
Yep, exactly. So now I guess we can get into the overall how the market price differentiates and the LP. So basically, every time you chicken in, when someone chickens in, there's a 3% fee, and that fee goes to people who LP provide liquidity into the BLUSD LUSD 3 curve pool on Curve. Which so you're earning when people chicken in, you're earning 3% fee. And who knows? I'm not following 100%, but there's some. I think they're getting like a curve gauge. I'm not sure.
So it is accurate. The process has started to get a curve gauge, but so it's gonna take a few more weeks because before the gauge vote, actually, there is another vote going on the pool, which will it will improve the parameters of the pool, so the gamma and a few other things. Right. The goal being to concentrate liquidity a bit more. Know that the pool has a few weeks of market activity, and so we have some idea of how it behaves.
Yeah.
So we will make the liquidity more efficient. That's the first step, and the vote is ongoing until Sunday, and then it will it goes into effect progressively with a ramping up process So essentially, within 2 weeks, if this bot goes through, the liquidity will become much more efficient for the same amount of TVL in there. And then a few weeks after that, we should be able to move through with the gauge what, yeah. So to add CRV rewards on top of the base yield for the LP and the LUSD incentives again.
So basically, the point of this BLUSD, LUSD 3-curve pool is to provide a liquid market for those who don't want to necessarily go through the bonding process, but they can still earn, earn this BLUSD without having to go through the bonding process and just buy it through the market. So this obviously means that there's going to be a premium, a market premium, because if BLUSD is earning this yield, all this yield amplification, there's obviously people are going to want to buy it off the market and not have to go through, like, there's going to be a premium to do so. So this is how this is like the main aspect, the entire system and how it works so efficiently is because of this liquid market, that it's sort of like a counterparty. The counterparty of this liquid, these people who want to buy the BLUSD in the market are those that are in the pending pool waiting for their B tokens to accrue. And if the market price, so like let's say the B token floor price in the reserve is $1 like it is now, but the market price, because like the BLUSD is earning 60%, I'm not sure exactly, 60% yield, people are going to want to buy that on the market. So now that market price is sort of like speculating. So that market price is now like $1.24. So to buy one BLUSD in the market is $1.24. Meanwhile, those who are accruing BLUSD in their bond, they're like, hey, why don't I, now I can take out my BLUSD earlier and chicken in earlier, and then simply ARB. So by ARBing through the pool, I could just swap through the BLUSD LUSD 3-curve pool, and because the BLUSD trades at a market price premium, I can now earn a profit whenever if I'm like as if before if like the price would be lower, then I'd have to wait longer for my bond to accrue BLUSD. If I were going to rebond or to simply ARB this market premium. Is there anything you want to add before I keep going?
Yeah, just a bit. So maybe a rebound, just in case it's pretty explicit, but rebound is essentially you claim your bond for BLUSD, you sell the BLUSD for more LUSD that was in the bond, and you recreate a new bond. And so this is also why the LP is critical, because you need the LP to be able to rebound. And essentially a rebounder is someone kind of engaging long-term with the chicken bond system, so pretty beneficial overall to the structure. The other thing I wanted to add is a bit more philosophical almost, I want to say, because as you understand chicken bonds, you would realize that a large part of the game of chickens, I want to say, is being able to price time. The whole system is essentially how well can you price time? And that kind of touches to what Barry was saying. For instance, your dead set, you want BLUSD, you want to be in, all right. But now you have a decision to make. Are you buying now, today at market price and getting BLUSD instantly? And so it's yield instantly too. Holding LUSD and waiting a month. You need to be able to do some math assumption, put a price on time essentially to make that call. Of course, it depends also of BLUSD market price and so on. But this is what I mean by being able to price time. And just other reference to regarding pricing BLUSD is, of course, a complex endeavor. So to facilitate the process, we have 3 prices displayed in the application. So there is a market price. This one, everybody knows it. It's, how much is it selling for on the curve pool? Right now, it's about 126 LUSD. But then we have 2 other prices that are made to help people guide the decision and understand the actual value in the system. So we touched on the floor price, the absolute minimal amount of LUSD guaranteed by the protocol that you can obtain by burning 1 BLUSD. So that's why it's a floor price, because it's a guaranteed minimal amount, essentially, and rising. And then this one is a bit more complex, and you touched on it. You contributed to the bounty. Thank you for that. the fair price, the fair price is really tricky because the fair price is essentially going from the floor price, but adding an X factor to it. And this X factor is trying to price the yield amplification of BLUSD. And so right now, the fair price is estimated between 122 to about 11 LUSD. It's a massive spread, but because it depends on the assumptions you take. So the low bound assumption excludes the pending bucket. So it excludes most of the assets of the system. And you still have a 120-ish fair price. So it shows you that even without the pending bucket, there is yield amplification already in the system. And the upper bound takes into account all the buckets. And so this is why you have a fair price of $11 right now, upper bound, simply because you have an amplification of about 11x.
Yeah, so it's the price of BLUSD times the yield amplification, and that's the top range.
Yeah, exactly. Yeah. Top range takes the full amplification, and bottom range takes the, I want to say, guaranteed amplification, the one ensured by permanent and reserve.
Yep, exactly. So I'm going to keep going, Ari, the bonds. So people in the pending pool that are either arbing, you call it arbing, because they've accrued, when they hit a certain amount, they can hit a certain amount in their bond, and it could be profitable if they were to simply arb through the pool, if they were just swap market price, because this market price is up, because those who are wanting to buy BLUSD on the market, because of this yield amplification. So when you do this, if the price, like now, when you have this large deviation between the market price and or we don't know if it's a large deviation, you have to like price that in yourself, but when you have this deviation between the market price and the floor price of the BLUSD in the reserve, obviously the BLUSD reserve price, you have, when people are bonding, their bond is accruing according to the cap, which is the cap is accruing according to the floor price of the reserve. So if they're accruing a balance and their BLUSD is priced at $1, $2, but the market price is $1.25, so there's a possibility where they can chicken in a little earlier and swap through the pool and arb it down, and just arb and earn this free arb opportunity, and just rebond if they want to. So when this happens, if they bond in earlier, this is why like a good percentage, a lot of BLUSD has gone, a lot of LUSD has gone into the permanent already, is because when this amplification, so you can bond in earlier, but when you're bonding, when you're chickening in earlier, more of that LUSD is going into the permanent pool. So and that permanent pool is always going to be earning yield for the BLUSD. So the system just continuously, you can sort of see the flywheel, how it happens.
Yeah, I think we kind of saw probably, I want to say, an extraordinary amount of early chicken-ins on that first cycle. And, those are not economically stupid, even though some of them essentially claimed BLUSD that were worth less than their bond, but they did it with a thesis. I guess, thesis like, oh, I want to be one of the first BLUSD holders, so I'm going to get this massive fat yield amplification almost for myself for a while. Or others too did it to provide liquidity, because they were trying to essentially, I want to say, front run the waves of chicken in, because you've understood now that when people chicken in, they send some LUSD as incentive to the LPs. So when you have a massive wave of chicken in, it translates into a massive week of incentives for the LPs. So that's one thing. And just to add on to the arbitrage you were touching, you can also arb by providing liquidity. And that's an interesting way of doing it. One situation I like particularly, because I like stacking premium on top of premium on top of premiums to make fat yields. And it's essentially, consider the scenario where LUSD is overpegged, like right now, $103. So the curve pool is unbalanced. The LUSD CRV curve pool is unbalanced. It has too much Swiss CRV and not enough LUSD. So if you deposit LUSD in there, you get a premium, first premium. But another thing is, then you deposit your LUSD Swiss ARV token into the BLUSD pool. And if that BLUSD pool has too much BLUSD and not enough LUSD Swiss ARV, you pocket another premium, multiplicative with the previous. And then you're into that pool that has interesting yield opportunities. And so that's another way, interesting way you can consider approaching the system. Works the other way around too. You just have to be cautious of the balances of the pool before making your move.
Right, exactly. And so the main thing to note in terms of that LP, that BLUSD LUSD 3 curve pool, is that while right now the reason why the BLUSD market price is high relative to the floor price, or so we think, is because the amount in the reserve right now is low relative to the amount of LUSD in the chicken bond system. So all this yield, so this yield amplification is high, which makes the market price high, and makes the deviation wide. Makes there be a wider discrepancy between the market price and the floor price. So this is why a lot of people, for now at least, the protocol and liquidity, the permanent bucket, will be just the people who are in the penny bucket will be. A lot of them will be just arbing and rebonding, or just arbing through the system because like it's profitable because of the price differences, and all that yield is just going to continue. That the rest of what when they chicken in, the rest is going to go into the penning pool, the permanent bucket, and that permanent bucket will obviously accrue yield. That all the yield earned there goes to the back to the reserve bucket, which will obviously always create this yield amplification, even if there were no more people in the penning bucket.
Yeah, so, and the yield amplification it provides, of course, is not 10x like the current, but it's still decent. If you look at the system right now, it's about 25% extra yield. So roughly, I don't have the metrics under my eyes, but I think you have about 500K in permanent and 2.5 million in reserve. So it means essentially you have 2.5 million BLUSD making the yield of 3 million LUSD.
Right.
And so this is why you have a fair price at like 122 or 23 to account for those 22-23% extra yield you're making right now, minimal, excluding the pending with BLUSD.
Yep, exactly. And now, so let's talk about what happens if the price, like ultimately the market price is going to go down relative to the floor. But who knows, like, because it's obvious how much more the LUSD is in the pending bucket. So,
well, it's not as mechanical as you would suggest, because there are also opportunities to do with BLUSD. We talked about the LPs. Right. But we are also looking into other interesting stuff to do. So, for instance, the EU lending market expressed strong interest in adding BLUSD as collateral within a few weeks when the liquidity will be a bit higher. So, essentially, my point is there will be more and more stuff to do with BLUSD, because you have to think about it's a damn hell of a sexy collateral. I don't know how to say it any other way, but you have a ERC20 token that is backed by a rising flow of the most resilient stablecoin there is on the Ethereum network. This ERC20 earns an auto-compounded yield, and you have a pool, you can sell it if needs to be, but even if that pool is completely depleted, let's say, for whatever reason, you can still redeem it against the system. So in the perspective of a lending market, it's like a super saiyan stablecoin. Can I use this as collateral? Yes, please. It's like, yeah, please bring me more of these. I want this. So I think it's going to be an interesting arc for BLUSD. But yeah, I agree with you. Right now, the system is early, and there will be large volatility, let's say, at least, because people are figuring out how it works. They are, joining at different timing and so on. And the pieces are kind of progressively being put in place together.
Yep, exactly. So in the event which will probably happen. The market price will go down relative to the floor. So this obviously means people are going to be in the pending pool for longer. This is not including like right now. What will get that price down is people arbing the pool, and then the not as much demand. Like it's like two different parties. So when there's more demand for the people that are arbing through the amount in the pending pool, and also the amount of BLUSD in the amount of LUSD in the reserve, so that kind of squashes the price down a lot because of the yield amplification is not high, and so people will rebond it down, sort of. So that yield. So while that whole thing is rebonding, they're all earning yield to the permanent bucket, and so when the price is down, when the price is not as high anymore, you're still the LUSD that's earned that's in the pending bucket will just be in the pending bucket for longer if they want to. If they want to chicken out, like by all means, they can always chicken out. But like, first of all, there'll always be this yield amplification, so there's always going to be this demand because of the permanent. But they're going to be in the pending bucket for longer for their yield for their B tokens to accrue over a longer period of time because the market price isn't as high anymore. So this means like when they chicken in, not only will that accrue a larger amount of LUSD to the B token, the BLUSD LUSD 3 curve LP because they're chickening in later. So there's a
doesn't
larger
change
amount.
anything. It sends 3% of the base bond amount. So duration of, if you chicken in 1 day in, you still send 3%. You chicken in 150 days in, you still send 3% of the base LUSD amount.
Oh, the base LUSD amount.
Yeah.
So, like not the okay, my bad then.
Yeah, no worries.
But the important thing to note is that you're still earning. When they're in the pending pool for longer, like that yield will obviously consolidate a bit, but there'll always be this yield amplification will naturally go down because of it. But they're going to be in the pending pool for longer, most likely, unless they chicken in early for whatever reason.
Yeah, and then the controller will also can also adjust actual speed of BLUSD if that situation is sustained for a while. So it won't adjust when there is just a flash dump, I want to say. But if rebounds time are actually going up on average for a while, it will adjust. The controller is here essentially to kind of has one mission, one function. It's to maintain this 1 month cycle roughly.
Yeah, right. So the bonding the cap, the accrual period for the curve isn't it like relative to the market conditions, like it differentiates, right? Hello?
Sorry, silly me, I was muted. So it's not directly taking into account market conditions. It's taking into account market conditions by proxy, essentially.
Market conditions of BLUSD.
So it doesn't account for the BLUSD price, but it accounts for it by the fact that it looks at how long are people needing to break even and to reach optimal rebound time. And if that duration increases, meaning that the price most likely decreases, it will increase the accrual speed to attempt to bring back the cycle length to 30 months.
Yep. And so now what's important to note is the tokens that are in the reserve in the penny. I'm sorry, there's so many different buckets. I just keep on rambling. But the permanent bucket, those LUSD, so that goes into the LUSD 3 curve LP and acts as more, like there would be more liquidity in that pool, protocol and liquidity, and all that yield will be directed back to the reserve. But also, this could also be in the stability pool. There's something called the shifting function, where if someone wanted to, like, let's say, swap back for, like, they're trying to repay their debt, their LUSD debt, but they are in a different asset, they can call the shift. I think it's like 10, like they have 10 minutes to like
So yeah,
do like,
it's a two-step process. So it's a bit like, when you withdraw to stake Tavi tokens, for instance, where you have to first call the withdraw and then it opens a window where you can effectively
yeah,
withdraw. It's similar here, except it's an hour window. So essentially, I can't remember the name of the function, but you open the window, if I may. That's the first transaction you do, and then you can actually trigger the shift. And then the shift has a few conditions. But essentially, you can shift as long as LUSD is trading at a premium. So at the contract level, it's defined slightly above $1 to avoid different kinds of manipulations. But in a day like today, where LUSD is at 103, you could trigger the shifting function definitely. And so you would switch the 500k roughly LUSD that are in permanent bucket, will be essentially single asset supplied on the curve LUSD sweep pool. And interesting things to note here, as they are supplied, they will be supplied with a premium because they rebalance the pool. So that's an interesting
yep,
thing where essentially chicken bonds are, I want to say, a bit of a profitable, self-fulfilling prophecy because of what happened with that permanent bucket. So to put it simply, in an ideal scenario, LUSD will be about peg for a while, and there will be several supplies from the permanent bucket into the pool with a premium. And then, hopefully, this will amount for enough pressure to bring back LUSD at peg. And if that's the case, that means the whole premium, the permanent pocketed, became realized, essentially. I mean, they would be realized if the tokens are withdrawn from the pool, but they will be actually effective at least. And so it's also a slight yield premium for the system at the end of the day.
yep, yeah. So
Oh
when
yeah,
you think
one
about
last
it,
thing, sorry, before I forgot, is shifting function is in the contract, it's here. It's just not triggerable yet.
oh,
So
okay,
it's
yeah, it's in the stability pool now.
yeah, right now it's in the stability pool, and essentially it's the last step of the system. So there were three, chicken bonds were launched initially. You couldn't chicken in. Then 15 days after, chicken ins were enabled, and then you couldn't redeem. And I think redemption are gonna start November 4th, a month after launch. And then the third and final function that becomes available is a shifting function on November 19th, so 45 days after launch, in about 2 weeks from now. And so it's going to be really interesting because I don't know how much is going to be LUSD in there by then. But right now there is 500k. So let's take a wild, not too wild guess of like let's say 1 million LUSD. And I'm saying that because someone in the question asked about the impact on peg and can we quantify it and so on. Well, giving some figures regarding to that. Simply, right now the curve pool is about 5 million LUSD for 60 million stable coins, DAI, USDC, and USDT. So if you supply 1 million LUSD into that pool, you've increased the LUSD balance of the pool by 20%. So of course, they're going to be arb and so on, but a simple way to look at it, ignoring arbitrage, would be saying that, essentially, if there is a first supply of 1 million LUSD and the pool condition is still similar, then it would lower the price at this time before ARB of about 20%. So it won't bring it to $1 just yet by
Right.
depositing 1 million, of course. But you see already 20% means we are at 103 right now, or roughly. One, it would go down to 1025. But then, 2 weeks after that, another supply and so on and so on. So we're hoping that over time, there will be like a cumulative effect that essentially progressively hammer down the LUSD price, step by step.
Yeah, and the it all depends, like, because of the A factor of the pool is like 500, which means uh, it's not that flat of a curve when it comes to the AMM. Like you have min, which is like 2000, but the LUSD three curve pool has like right now I think it's like a 90-10, if I'm not mistaken, 90% LUS 90% three
Yeah, yeah. The
curve
LUSD
and
3 CRV is about that. 90% 3 CRV, 10% LUSD.
yeah. So yeah, that would obviously kick it up, kick it up a lot. So, and in the grand scheme of things, if you went when you have this shift, like this function where you can provide liquidity. Like let's say you want to utilize the Liquity system, and if there's ever a premium, you now can mint at $1. Before you had to worry about, like we saw when there was a flash crash, you would have to run back into LUSD and repay your debt. And sometimes that would have to be at a premium, like when LUSD is trading at a premium, because everyone's trying to accomplish the same thing. Now that there's more liquidity in the permanent, which not only is there more liquidity, you can use that to your advantage whenever you want, when you want to repay it. So you now, like in the grand scheme of things, you will now have more demand. I think personally, like just the common sense, for minting LUSD now that you have this whole system, and then you can see the whole system repeats. And there'll be more.
Yeah, an interesting thing about the shifting function too is when I was first introduced to it, my first question was, is there an incentive for the caller? And I quickly realized it was actually an ill-informed question, because there is a built-in implicit incentive, so you don't need to add an explicit incentive. So what I had in mind initially is, I don't know, maybe the guy calling the shift would get, I don't know, 0.005% of the LUSD to cover for his gas or whatever, something like that. But actually, you don't need that, because you just highlighted what I call the implicit incentive, is that have this reserve of LUSD that with two transactions that are not too gas intensive, you can shift into the curve pool. So if you're looking to buy LUSD and you're looking to buy, let's say, a decentish amount, probably you won't do that for 5K because it would be hard to come back on your gas. But let's say you're buying several hundred Ks, then it might be actually profitable for you that instead of swapping them straight directly, and maybe they would cost you, 102K USDC to get those 100K LUSD. Maybe instead of doing that, you first trigger the shifting function, and then you buy your LUSD. But maybe then, because you shifted whatever many and the price lowered a little bit, no, you only pay 101 K USDC. So you saved 1K in the price of your LUSD, and you've paid, I don't know, let's say $50 of his gas on the other side. So as the one triggering that function, you're happy you've made money and you have an incentive to trigger it.
Yep, and exactly as you said, the grand scheme of things, this will ultimately lead to more liquidity, the Liquity protocol itself, the more utilization of the protocol itself. And whenever now like we see, whenever there's we're obviously not realizing it now, as LUSD trades at $3, $4, but when it goes live, and as more LUSD accrues into the pool, into the permanent pool, there's just going to be more demand, just logically, for to mint and to open troves, which will obviously create more with a 0.5%, which goes to the
LQTY stakers, yeah.
LQTY, sorry, my bad.
No,
stakers. And whenever there's like an ARB opportunity, indirect ARB opportunity to just mint LUSD, there's obviously that opportunity is going to be like the price of LUSD is going to be limited in terms of how far of an ARB it can go because of this POL.
Yeah, it acts as a buffer essentially. Yeah,
as a buffer. Yeah, which just creates more. There's more demand because you can always there's not always going to be. Yeah, what were you gonna say?
Yeah, we're actually kind of seeing the impact of chicken bonds on liquidity already. So as I think that was your point. So what's interesting is in the first couple of weeks of the chicken bonds, there was no, let's say, statistically significant uprise in LUSD mints. So it seems that for those first weeks, it was more people who already own LUSD or people who bought LUSD on the market because the price appreciated a little bit during that period too.
Yeah, exactly, 100%.
But then after October 19, when the chicken-ins were enabled and the LUSD came into existence, and so did its pool, and you could trade it and so on. We started to see, let's say, a synchronized uptrend. So the chicken bonds started to receive more interest, and we saw an increased velocity of deposits. And the positive news too is that where did these extra deposits came from? Well, it seemed that people minted them, because at the same time, during the same week, we have a very nice, lovely LUSD minting week, where I think, we're on an average of like 1.5 million LUSD minted per day over that week. And it's been a while since we've seen this kind of trend. So yeah, it's really encouraging, at least.
Yeah, 100%. I guess we can open up the floor if anyone has any questions. Is there anything else we should cover first?
Yeah, I was about to suggest the same thing. I guess, not surprised coming from you, but I want to say it's a bit of we went heavy on the economics side of it.
Yeah.
And we haven't touched at all the NFT side. I'm not sure like what's the interest of the audience for that.
Oh, yeah.
So maybe we can take it in, address it in questions. I don't know. I think some people asked to speak early on, but I don't see them anymore. So if you have a question, just raise your hand or whatever the thing is on Twitter Space. And yeah, while you get ready, you raise your hand to ask questions. We also ask on the Discord early on if there were some questions. So let me read them right now, so we can answer them. So Torrent was asking about essentially if we have any kind of assumption regarding the impact chicken bonds will have on the peg, and do we have kind of a figure that we think is needed within the chicken bond system to essentially achieve peg with, let's say, a significant success rate. We have some estimations, but it's really hard because, essentially what I want to say is you can have two LUSD chicken bond system with 50 million overall in there, both, but in reality they're completely different one from the other because of the actions the player took and the timing of their actions. So one might be much more heavy in the permanent bucket, and the other might be more heavy in pending, depending on the stage of maturity, for instance. And so it's hard to modelize, but I'm going to say it like this: this is not chicken bonds or Liquity, but personally, at least, I try to run the math. I'm not a big math person. I tend to do more napkin math, but I would say essentially a really sizable and sustained impact is reached already in terms of about $30 million was my first threshold for it to be significant regarding liquidity and peg. And then kind of the golden number, if you want it, was more north of 50 million overall in the chicken bond system. Might not be enough to guarantee that LUSD will always forever from that day trade at 100 against other stables, but I think to contain it within, let's say, below 10015 sustainably.
Right. I mean, if you think about it, like if you think about it and you see how much liquidity is in the curve pool right now, I know there's obviously other DEX AMMs with LUSD, but the main I think the main place of LUSD trading is on curve.
Oh yeah, it's curve.
So right, so and I think what is the LUSD 3 curve pool? I think it has
about 70 million total. Yeah, like maybe roughly 6 million of LUSD, 64 million something of stable, roughly 70 million TVL total.
Right. Yeah. So like if you think about it logically, and as more obviously as more LUSD goes into the permanent bucket, we could always see, and whatever it is, it's always going to be increasing the amount of LUSD. Like no matter this, because even if there's just a little bit of demand from new bonders, you're still earning that yield from them. So it's an ever increasing amount of protocol and liquidity. So I guess when you have as I said before, when you have a system where you can rely on a certain aspect to help keep peg. It's there. There will obviously be more minting going on to push the price down, because there's more, because they could always depend on when they have to swap back and repay the debt. Then like there's this aspect of safety, I guess.
Yeah. I guess to a bit wrap this up, and then Toshi Flo asked to speak, and he has a question, so we'll be listening to you, Toshi. Sometimes the way I present chicken bonds, because I think they are actually a weird beast in terms of there is no other protocol like chicken bonds. It's a very different novel approach. And I think the key difference compared to what DeFi has seen so far is that it's a protocol that, again, brings back the time element into the equation in a careful and cautious manner. And so sometimes I introduce the chicken bonds as an engine to capture and sustain liquidity over time. And I think it's a fair description because, yes, we talked about the impact of potentially the first shifting. But again, the idea is that, the system will keep running cycles after cycles, and it's really over time, progressively, that it will achieve its goal. So, Toshi, sorry, yeah, go for it.
Yeah, sorry. And not only that, like we know that LUSD is the most capital efficient stablecoin around, and you're not paying any interest on it. So it's just like from an overall perspective, the protocol itself is one of the most efficient, and the main issue that it had was keeping peg. And now that we have the system in play, it will obviously create more utilization of the protocol. So yeah.
So, Toshiflo, you still around?
Yeah.
You wanna?
Hey guys.
Hi.
Hey guys. Thanks for having me on. No, look. I think you're right. Token Rice about. I think this is a Super Saiyan stablecoin. Um, it's pretty amazing. But I think the game theory here, from just wrapping my head around this whole thing, is really being on both sides of this, where you're creating the bonds, you're accruing. But at the same time, the early bonds, I think the play is to, well, or just buy in, but and add LP, stake LP in the curve gauge. I think the ultimate game theory is to be on both sides of the coin. I think that makes the most sense and gives you the most flexibility within the protocol. But I also heard you say something about perhaps something special. Chicken Bonds was going to do something special for people that were adding LP to the curve gauge. Is that something you could talk about, or is that?
Oh yeah. No, it's actually already live. But sorry, maybe I miscommunicated a bit on this. So it's actually affecting a part we haven't discussed much today, which is the NFT side of Chicken Bonds. So for a very short story, essentially when you bond, you obtain an egg NFT with various attributes that are generated at random. And then this egg transforms into essentially when you chicken out a scared chicken, and when you chicken in a very proud, mighty chicken. And this proud, mighty chicken gains new attributes, and some of which are indeed kind of like bonuses, depending of let's say, your on-chain interactions with Liquity as a whole. So what's taken into consideration is the fact that you own a Liquity trove, so that you are borrowing LUSD. That's the first thing. It will give you access to some bonuses. The second thing is that if you vote for the gauge of the LUSD 3CRV pool, so that's the one you had in mind, I think. And finally, the last one is simply if you own or stake LQTY tokens.
Okay, that makes sense. All right. So yeah, okay. And then another question I had was in regards to the NFT themselves. I noticed, so I've been on Looks4Rare and kind of checking some of these NFTs, and I did notice, like, and I will say, if anybody's looking to buy the NFTs off the, on a marketplace, NFT marketplace, to definitely check the Block Explorer, because
Oh yeah.
I noticed there's some lag going on between, chickened out bonds or so they look active
Yeah.
for some time,
Don't
yet
trust the
they
visual. Refresh the
correct.
metadata at least, because the
Yes,
marketplaces don't do it automatically. And
right.
so maybe, they refreshed the metadata yesterday when it was still an egg, but since
Hmm.
then the guy has chicken in or chicken out. And
Right,
so if you buy that egg, you will be buying a chicken in or out NFT. And so you'll be buying an empty NFT essentially that doesn't have any LUSD in there. So yeah, it's
right.
a bit of an annoying thing. I think there was a little mitigation feature that was added, which is that you cannot trade the NFT for a certain dead period after you chicken in or out to
Hmm.
kind of make it harder for scammers to pull this kind of trick.
Yeah,
But yeah, if you intend to buy eggs, thanks Toshi, that's a good call. Be careful, check on chain the status, ideally, or at least refresh metadata and make sure the bond is active.
great. And so once they are, they're updated. Um, it looks like there's an actual price for the NFT. There's like floor prices for just even on a chickened out NFT or chicken, whatever. There are floor prices for the actual artwork as well, aside from the value of the bond. Correct?
Yeah, it's an interesting thing. We were really curious to see what happens there because just to explicit it, maybe for people a bit less familiar with the model, but the egg NFT is your bond, so it contains the LUSD of the bond. So anyone you send that egg to me, I can chicken out and get the LUSD that were in there, or I can wait whatever I need to wait and claim the B LUSD when that's interesting.
So
Uh,
yeah.
but then when you chicken in or out, it's just a cosmetic, a visual NFT. Your egg evolves, and you got your assets. So if you check, you've gotten back your LUSD, and so NFT now is empty. It's just visual, and so
Right.
it's interesting because I haven't looked too closely at the market, but yeah, essentially what happens. So the egg, we know they have a price, at least the amount of LUSD in there, plus maybe a premium for the bond and the art. But for
Right.
the chicken in and chicken out, it's indeed pure cosmetics. So I'm kind of
Can I?
curious to see
Yeah.
where the market will be. Yeah, go for it.
Can I propose something for you guys?
Tell us.
Because obviously, the rarities. If you're participating in Liquidity and you have a trove and you have a loan and you're doing other things, it increases your chances
Correct.
of getting, or the value, right? Or the value of the bond can increase your chances of getting a more rare NFT, right?
Indeed. Yeah, it gives you better
So,
chances at rolling rare attributes.
right. So once the bond has been sold, right?
Yeah.
And it just becomes that rare artwork. I think maybe you guys might want to think, instead of just having artwork NFTs with rarities, if you gave that artwork utility for the, especially for the people that have rarities because they're participating in other parts of the Liquidity protocol, I think that you could give those NFTs a lot more value without the bond value on its own.
Yeah, no, it's an interesting angle indeed. We were thinking a bit about this. Indeed, those, especially chicken out NFTs, they don't tell so much, especially because if you start giving them utilities and they become really desirable, then someone can just spam the system to create a ton of them. They will bound, chicken out, bound, chicken out, bound, chicken out. Then you could take into account the time, but they're not super interesting in terms of on-chain data they provide. But the chicken in NFT are kind of, as you were saying, on-chain proof of your commitment with chicken
Right.
bonds,
Right.
and an on-chain proof we can count over time. So let's say a year from now, there will be a difference with a guy that just has one chicken in NFT with 10K in there versus the guy that played the system since the start. And at this point, he should have 12 or even more chicken ins NFT.
Because chicken ins would be where the incentive would lie, and chicken ins with rarity because they're participating in the Liquidity protocol as a whole, and the value of their bond, and they participated in chickening in. So if you guys did something without some kind of gamification, I think that could give the NFT some really cool value once the bonds.
Yeah, we need to give it some thought because, I want to say if we were just another protocol, the answer would have been quite easy. We would have thrown some bullshit governance on that NFT and boom, go at it, you lions. and that's sorry done, but
Right.
we don't have governance, so that's done, and it's about what kind of utility can we add to it that makes sense and is synergetic and so on. So let's say we have our eyes open and we're all ears, and if we find a good fit, we will. But to be a bit more transparent, let's say in terms of upcoming development for the chicken bonds, I think the most interesting primitives at this current stage for other projects to build on are BLUSD, as we talked earlier. Prime collateral will most likely be added as collateral within weeks, months, somewhere at least. And then the egg NFTs are also interesting NFTs, because those are NFTs, but they can be redeemed for the LUSDs that are in there. So we're exploring actually how to enable borrowing using your NFT eggs as collateral. So that would be leverage bonding, essentially. That would enable that, for instance. So yeah, the egg NFT and the BLUSD token itself, I think this is where most of the, let's say, external developments are going to come on at first. But yeah, eventually we could also envision something for the chicken ins NFT.
Cool.
And,
Cool,
that would make sense because we need to let time for people to accumulate them again. So maybe a few months from now, that would be a good time to reconsider that.
Awesome, man. Well, thanks for letting me talk. Congrats on the protocol. I'm excited about it.
Thanks.
Oh, one last thing.
Yeah?
So one of my partners just asked Jesse, a really cool guy. He's been promoting chicken bonds pretty heavily. He reached out. Part of the
I don't know what happened.
Yeah, Liquidity fork, Liquid Loans. He got blocked by chicken bonds. He's onboarded a lot of people to chicken bonds. I think he posted a meme. It was pretty awesome, and then he got blocked.
Was it fun? Yeah, we can have a look at it. What happened is a lot of Pulse chain aficionados tend to be quite spammy with the interaction, so you might have gotten caught in a wider net.
Gotcha.
I'll check it.
Cool. All right, guys. Thanks a lot. Have a great day.
You as well. If anyone else has any other questions, definitely raise your hand. I wanted to add one more thing. So basically this isn't just LUSD and Liquidity that can use chicken bonds. This is like any project can utilize the system for if they have like some sort of like IL free yield source. They can create a chicken bond system and accrue protocol and liquidity. I had my friend, shout out Prismatic Capital. He suggested something along the lines of, if you're aware of Liquid VLCBX, vote lock CBX token.
Yes.
So,
yes. I thought about it. It is genius.
Right.
That would be llama bonds.
Yeah, exactly. And just accrue POL, because like the main issue there is obviously keeping peg, and when keeping the whatever liquid wrapper for the VLCVX, the peg in the of the actual token itself. So this system could really help that.
Yeah.
Hey, can I just say one last thing real quick? So we're creating an auto compounder for Liquidity on the Pulse chain.
I'm sorry, man. No Pulse chain stuff here. I'm sorry, but like we talk
and Ethereum. So we're putting something on Ethereum as well. But we're actually looking at possibly automating some of the chicken bond features. So as far as the setting percentages on the yield you're trying to look for and other elements as well. Something I'd like to talk to you more about, Bryce, when you get some time.
Yeah, feel free to reach out in DM. So
cool. Thanks.
For the other projects harnessing the bonds, as you noted right now, so essentially the bonds are made for LUSD, they're made for a stablecoin that can harness a source of yield free of impermanent losses. This design space is quite narrow, and it's more essentially, we built LUSD Chicken Bonds for all needs because LUSD needed liquidity. And also to test the very idea of chicken bonds. Do people like bonding? Do they understand it? Does the whole game theory work and so on? But then the vision is to generalize that model. And so the criteria for generalization is that it should be able to stomach any arbitrary ERC20 token, be it volatile or stable, and it does not have any yield requirements on the token because it will harness and build its own yield source, essentially. So that's the vision for the model. It's being precise, refined as we speak, so it's a bit too early to share. But I expect most of the utilization by other projects of chicken bonds to happen under this generalized chicken bonds model. But then, yeah, there also are some projects that actually we didn't think of them, but they do fit the bill really well on the current model. So you mentioned this idea of doing it with a liquid VLCVX. That's super sexy. There is also Beanstalk, a stablecoin protocol that has uses LUSD for its backing, and they are actually also exploring kind of forking and reutilizing the chicken bonds LUSD model for something that would be synergistic for the stable and also kind of synergistic with LUSD overall. So that's a really interesting angle. But yeah, we'll see. Those things will take a bit more time to unfold. And for generalized chicken bonds, yeah, we're talking more. So the vision is to, just like we did with, testing chicken bonds with LUSD, well, we're going to be testing generalized chicken bonds with LQTY. And so that would be the first run at it. And then, a few months after that, if everything goes smoothly, then the model will be open for any project to kind of use it. Of course, at first, it will most likely be kind of a curated first batch of project to ensure smooth onboarding. But ultimately, I have this vision. We have this vision called the Chicken Bond Factory. And as the name would suggest, that would be a self-serve permissionless factory to deploy your chicken bond instance.
Yeah, it sounds amazing. I'm really excited. Does anyone else have any other questions before we end the spaces? All right. Well, thank you all for coming. I'm gonna be announcing the giveaway winners on my Twitter right after this. But yeah, it was great. Thank you all for coming. Thank you for coming, Token Rice.
Thanks for the invite.
Yeah, for sure.
All right then.
All right.
Good luck to you all on the draw and have a great evening.